Australia's second biggest buy now, pay later company listed on the ASX, Zip, reported their 2021 financial results to the market today. Here's what you need to know. Z1P, they reported their key performance metric, their cash transaction margin, came in at 3.5%. But that tells us that their transaction margin fell by 0.3%, meaning they're making less money from transactions when compared to the same time last year's transaction margin of 3.8%. Now, as an aside, let's compare Zip's transaction margin to Afterpay, who just reported their results to the market today as well. Now, Afterpay's key performance metric, they call that the net transaction margin, that came in at 2.1%. Now, Afterpay also saw a drop in how much money they make off transactions, but their margin only fell by 0.2% when compared to the same time last year's transaction margin. But let's get back to Zip. Zip reported their total yearly loss deeply worsened after tax, falling over 3,000% to a full-year loss of $652 million. That was a big disappointment. The market only expected a loss of $206 million. But it's really important to remember you do have to dive to the detail. We know Zip is a tech business and their costs greatly increase. Why? Well, several key reasons. Zip completed the purchase of Quadpay as they rapidly scale up into the US. Zip also officially started offering services in the UK, Canada and Mexico. And Zip also just established entry into Europe and the Middle East. Meanwhile, Zip is also about to fully take over South Africa's buy now, pay later provider called Payflex. And that will give Zip access to a younger and faster growing population, and that's the South African population. So good news there. Also, on a brighter note, Zip's revenue surged 150% in the full financial year to a record of $403 million. So that was a tick. As for the future for Zip, their global presence now contributes 46% to revenue. And Zip says that this is going to be a key driver of growth for this financial year. While Zip is also fully leveraged to take advantage of their partnerships with Facebook and eBay. So how did the market react today? Well, Z1P shares rose 0.8% just after 12 o'clock to $7.38. So far this year, Zip shares are up 39%. Citi has got Zip as a buy, an $8.90 target. Morgans and Ord Minnett also label Zip as a buy. Ords has got a $10.50 12-month target. Meanwhile, Macquarie and UBS say that Zip is a sell. Price targets are $6.50 and $5.60 respectively.